In the agentic AI era, are unicorn valuations dying a slow death? Is a new model of company creation emerging? And if so, does that mean a new model of wealth creation is also emerging? The data suggests a big yes. Today, 80% of startup acquisitions occur for less than 300 million, and 77 of exits happen between pre-seed and Series A stages. Rather than waiting years to build multi-billion-dollar businesses, investors and entrepreneurs and corporate buyers are increasingly acquiring innovation at a much earlier stage in the journey. The message is becoming crystal clear. Stop chasing unicorns. Why? Well, AI is dramatically reducing the cost, time, and risk of launching new businesses. What once required large teams, significant capital, and years of execution can increasingly be accomplished by smaller teams at warp speed. The rise of digital labor is totally transforming new company building models. So is the traditional unicorn or bust mindset becoming obsolete? And if so, what does the new startup playbook look like? Hello, and welcome back to the Next Frontiers of AI, where we explore the strategies and the real-world success stories shaping the future of AI. I'm your host, Scott Hebner. Welcome back. I'm so excited for today's discussion. Joining me to take a deeper dive into all this is Mark McNally. He's the founder and chief nobody at Nobody Studios. Mark has spent decades building, scaling, and investing in startups, and today leads one of the most interesting and innovative venture studios out there. His company, Nobody Studios, is helping rapidly transform new ideas into companies faster, cheaper, and more efficiently than ever before, and with tons of success. So Mark, let me bring you up here. It is great to have you on this podcast. I've been looking forward to this conversation for a while because this is a super interesting conversation, I think.
Yeah,
economics, right?
Yeah, appreciate being here. I'm excited to have the conversation.
All right. Well, before we dive into this topic, give us a little bit of background on your journey to where you are now as the founder and CEO of Nobody Studios. And, what are you all about? And I love the title, by the way, Chief Nobody. But why don't you just give us a little bit of background for our audience?
Yeah. So let's see. I've been building venture-backed startups for close to 30 years. Fortunate that my first startup I built, joined as employee 8 of a company, a bunch of guys in the back of a warehouse trying to invent the future of this new thing called the internet. And we built one of the first platforms that connected buyers and suppliers before B2B commerce was a thing, scaled it to 1,000 employees, took it public on the NASDAQ when I was 25. So that was my first startup, and enjoyed a pretty amazing success and a ride. We peaked at about a $4.5 billion market cap. I rose to number 3 guy in that company. So everything that was strategy, product, and marketing was on my side of the house. And so just had a chance to live through a entrepreneurial dream of, taking this little concept on a whiteboard and watching it grow to real customers worldwide and real financial resources and partnerships at the highest level. I got a chance to see, my employees that worked for me become millionaires. And that was just a hell of a journey. I also saw the market implode a couple of years later. So I assure you, I built plenty of character when the market corrected itself. But I didn't think that was just a perfect first 4 or 5 years of my career to see just that whole process of brand new technology. If anybody's on this call can remember the internet, it's like everything was new. Everything was going to be reinvented. Everything that you used to do was going to be reinvented in a new business model. And it's very similar to what we're going through today. And I don't think we've gone through anything like it since. Like, it's kind of the internet and AI, where it's like this paradigm shift that has everybody rethinking everything, right? And so there's just a lot of things in my career memory banks that are emerging right now into this day and age. In between there and here, I've been involved in early stage startups ever since. I've done 12 companies where I was a founder, C-level executive, all at early stage companies. Had a pretty good ratio there. About a third of those we found successfully exits. A third of those we failed miserably, so learned a lot in the process. And a third of those are still out there. And I've been a small angel investor, mentor to lots of other startups along the way. So you kind of get this theme. I love startups. I guess I'm attracted to big, gnarly ideas that hopefully are properly irrational. I like bringing together the people and the capital and making a good run at them. And it's pretty magical when you get it right.
Yeah, I suspect, like, most things that when you lead and drive successes, you have to have some failures in there. Otherwise, you're not learning. You're not taking enough risks, right?
100%. And sometimes the successes are people don't realize how close you were to failure, right? And you just got maybe lucky that it didn't end up a failure. But a lot of the failures were remarkably close to great successes, and some of those hurt the most, but they're also the ones that teach you the most.
Yeah, institutional knowledge.
Yep.
Yeah, you gotta, like, I always used to have the belief that, if you don't miss one flight a year, you're not using good use of your time. So you got to push things. But to your point about the e-business era and the internet era, which did transform like everything, I think you're right that this is that era all over again, but on steroids. I mean, this is at warp speed. And I think having lived through that era also, and behind the WebSphere platform that IBM put out, it certainly changed everything quickly, but it took time to roll out. Where I think what you're seeing now is just at a much quicker pace, and because of that, it's changing the economics of everything. So where I wanted to start with this was, the last 15 years or so, the startup world has largely been obsessed with unicorns, right? Billion-dollar valuations. Yet today, as I was pointing out in the start to the podcast, things have seemed to radically change, right? We're witnessing perhaps the end of a unicorn era, and love to get your perspectives on that and what you think is driving that shift.
Yeah. Well, the studio was created really kind of seeing this inflection point of AI about to take off, but it wasn't just AI. There's lots of other paradigm shifts that are converging to just make us have to rethink how you build and fund companies, right? The company that I built that we took public, we actually built our own data center for $8 million with a raised floor and halon fire extinguishers. And today you just spin it up in AWS for, $500, but across the board, these enablers allow you to spin up things in ways you couldn't even 5-10 years ago. And what that translates to is your moats and your head starts that you used to have as an investor, right? You used to be able to say, well, I'm going to be the first and I'm going to be, get penetration and I'm going to have a product in the market. And they were defensible moats. There was an actual thing about moving the fastest. And that is still true in some business models, right? But product isn't the moat that it used to be, right? You can build products now in a fraction of the time in scarily great detail and with a lot of built-in lessons and learnings. So you can't just say, I'm going to be the first to market with a product. And so what I'm not seeing is people fundamentally rethinking what the risk profile is and the expectation for how much you put into a company and when they can exit. And we thought we saw that, years ago when we started the studio. So fundamentally, the studio is about, let's reinvent how you build companies. You should be able to build companies leaner, meaner, with tighter cap tables, meaning you're not trying to raise $1 gazillion. Because as you said in your intro, if you look at the stats, 80% of exits are happening under $300 million. And in a market like this, where innovation is creating so much chaos, it's actually going to become a highly acquisitive market, we believe. And I'm not talking about the things you see that, hey, SpaceX bought Cursor. I mean, those are the headlines. There are 1,000 headlines a day you're not seeing of vertically focused private equity backed companies you've never heard of buying a unique niche company for $50 to $100 million. It's happening every day. And it's going to happen faster and faster because this innovation is so disruptive that the people that have, incumbent success, like a publicly traded capital or private equity backing, they can't innovate fast enough. And it's not really no hit on them. It's just, it's happening so fast. You can't recruit the team. And there's lots of potential real threats to their business models overnight. And the best thing they can do is take those threats off the market. I mean, we're dating ourselves. When you go back to the 90s, Cisco became the most valuable company on the planet. And they were fundamentally just an acquisition machine because they knew they couldn't attract the talent in-house to innovate the stuff. So they let their team leave, create a company, invent the next future, and then acquire that company back, right? And I just think that you're going to see acquisition as innovation as a real thread in the next, couple, 5 to 10 years, if it isn't already. But if you're going to feed that market as in terms of building great technology and teams and companies to acquire, you think differently, right? So if I were saying I could build a company that's definitely going to go public in 10 years, maybe I raise $1 billion and I make my company worth 10 billion and I go at it for 10 years. And there are certain business models where that is the thing to do. Don't get me wrong. But if you're not going to do that, and you know you're going to build something really great and you can exit that to a number of really interesting players in the next couple of years, then you need to keep your financing in a certain way. You keep your corporate structure in a certain way, and you do the things that matter that make you attractive to those partners. And this is very contrarian to what we were taught in my career, and I get it, and I still believe, don't get me wrong, build great products, make customers happy, create revenue. Those are still the goals. But what people don't realize is if you overcapitalize your company, right, then you make it really, really hard to exit at any kind of profitable number unless it's unicorn or bust, right? And that's what people don't realize. And so when it works out, it looks fantastic, right? However, if you raise it on unicorn value, and I think there's something like 500 of the last 1,000 unicorns that were created are undervalued now, right? They're no longer considered unicorns, meaning they have to raise money at a lower valuation, meaning the previous investors lost money, meaning they're probably laying off employees. So it ends up being a bad thing for folks. And it sounds great on the SpaceX stuff, but you know what's sexy about SpaceX? Not that you bought into SpaceX last week, right? And that's what this slide is saying. What's sexy about SpaceX is if you got in 10 years ago, right? Even better, God bless you if you got in 15 years ago, right? Because there used to be, and this is what this is trying to say, this slide, is that when I built my company, you had a lot of the value creation really wasn't in the private markets, right? When you were struggling along to get your Series A and Series B, and we did a mezzanine round before our IPO. Like if you were in our mezzanine round before the company I took public, that was 6 months before, you made like 1,200% like a year later. It was like ridiculous return. So getting in pre-IPO, that became that term, get in right before the IPO. Getting in pre-IPO with SpaceX means you're buying in at $2 trillion valuation, right?
Yeah.
And what happened a week later? It's flat, right? And it's going to probably go down because that's what happens. It's nothing about SpaceX. SpaceX is a great company, but people are going to take their profits and then it'll build up support. It'll probably grow to 3 or 4 trillion. Like, I'm not an anti-SpaceX thing. I'm just saying what's exciting is to get in early. Google invested, I don't know how many billions of dollars in SpaceX 10 years ago. At a $10 billion valuation, I think it might have been 20. Still, I mean, that is a nice, significant return, right? They made 20 times their money in like 10 years. Those are exciting. But if you'd gotten in before and you got in at 500 million or even less, like the returns about being into a company early, that's what's exciting. Not that it's worth 2 trillion now. Facebook did the exact same thing, right? That was the first time we actually saw this. Facebook, the market was clamoring for it to go public. It was able to raise billions of dollars privately for the first time we'd ever seen kind of in the market. So they didn't need to go public for that capital. And you saw their private valuation skyrocket. I think they peaked at about $100 billion valuation before they went public. And then they dipped down to like 80 billion after that. So people who got in pre-IPO lost money, right? Unless you got into it early. Now it's in the stratosphere, but it's not, it's like a different swing. So what's exciting about getting involved in startups is getting into something when it's worth $5 million and seeing it worth hundreds of millions of dollars. And that's the business that we're in. It's early stage. You got the risk associated with it, but when you get it right, you can see 50 to 100x multiples.
Yeah, and I read a ton of stories on the SpaceX thing. I think it actually is a great example of what can happen, obviously on a big scale, and you're dealing with Elon Musk here. But I think I read one story about a mechanic that had just migrated from Mexico, and he got in very early, and he's like, I forgot what it was, but it was either 12 or $60 million, right? And the stories are amazing, and I think what you're saying is that that's a big, high-profile story, but it's happening thousands of times around the globe all the time now, where in the past it really wouldn't, right?
Yeah, but I also think you're seeing the tail end of like SpaceX. You have to appreciate has been at this 20 years, like at least 15. I mean, this isn't some overnight success story, right? This is a lot of hard work, old school financing. I mean, at some point they were raising under $1 billion and then $1 billion. And when they raised a $10 billion valuation, everybody's like, oh my God, that's amazing. I mean, nobody can really say they thought it was going to be at a $2 trillion mark in a couple of years. Like, no one can say that. But, they built a real business with real revenue, real customers, hardworking, old school stuff, right?
Right.
But it took 15, 20 years to get there. So I just think people are missing somewhat the economics. And the problem with that unicorn or bust mentality is that there's a lot of utility in building great solutions and great technology and finding the appropriate acquisition for that. The idea of going long-term, it's just riskier than it ever has been because of the disruption, right? The technology is changing so fast. You see a new LLM come out with the technology and you're like, oh, that's really great. And then people scramble to kind of, smooth off the rough edges around that.
Mm-hmm.
And they fill a gap for like 3 to 6 months. And I really appreciate them doing it because we use those tools. And then the next LLM, improves on it and doesn't have that problem anymore. And those companies are dead. Right. So, for us, we get really attracted to where there's moats and defensibility. But I also think long-term as an investor, it's really hard to project long-term defensibility and finance it, with that in mind.
Yeah, I mean, it becomes more challenging, but it certainly seems it could be not just a different model, but could be more profitable for a lot of people, not a few people, right? Changes the economics.
Yeah. And there will be unicorns. I'm not an anti-unicorn person. I'm just saying that the idea, I think it's done a disservice to investors and entrepreneurs to believe that is the only outcome, right?
Yeah.
It kind of like be going into the entertainment industry and saying, Marlon Brando or bust. Like, that's my out. If I don't get that, if I don't achieve that level, if I'm not Brad Pitt, whatever, you set a goal so high. And there's a lot of people who've made fantastic careers in the entertainment that you may not ever know. And, they got a home on the bluff in Southern California and they vacation in Europe and they've got the life that you dream of and they have the people and the career that you dream of. But if you associate yourself to the wrong outcome, you can really steer yourself wrong. And I just believe when you say unicorn or bust, the way you structure the company, the way you finance it really puts you in a very rarefied air and people are missing the thousands of successful exits out there where people were below that radar. And I think that's where the sweet spot is. At least that's what we're focusing on. So,
yeah. And one of the things, in our conversations that we've had over the months or so that we've been talking, the thing that really jumped out to me was your notion here that AI is becoming a company creation engine. So help us understand that a little bit. What can entrepreneurs and venture studios like what you got do today with AI that would have required, whole teams, millions of dollars, years of effort, just a few years ago?
Yeah. Well, look, I like to say anybody who thinks they have it all figured out is full of crap because, I spend all day long and think about this stuff and I doubt myself 5 times a day. I think the best thing to understand is everything is in change. And it's not going to look like it did yesterday, right? There's multiple levels to how AI is changing how people build companies. On one level, simply how you build product, right? In the old days, you'd search high and low to find the best engineers. These were top dollar people, and if you didn't have a good engineering team, you weren't building a product. Now, I'm not so far on the you can do everything vibe coded, spectrum. But certainly we're somewhere more towards you can do a lot more than you used to be able to. So if you have a couple of the right people on the technical team, you can do amazing things really quick with a fraction of the cost and time, right? Yeah. And that'll continue to be pushed. So just that side product is less of a barrier, but it also means it's becoming more of a commodity, right? You build something great really quick, someone else can build something great really quick, right? Mm-hmm. So you're going to have to become more creative about what is defensible, what is unique to your business model. So we might get really excited about a feature set. Hey, this feature set should exist in the market. People would use it. People might even be willing to pay for it. But that's not good enough if we can't find a way to make it defensible. And for that, we get into areas like, is there a unique data set? Is there a unique partnership? Is there a unique go-to-market? We call it dirty AI, but we say, where do you get your hands dirty to actually build this business? It could be an alliance, a partnership. It requires eyeball to eyeball trust. Those
Mhm.
are things AI won't be able to do for a long time, if ever, right? So it's kind of ironic that I would have told people wrongly 5 or 6, 7 years ago, become an engineer because you have a job forever, and the sales and marketing thing is probably dying. And I actually think it's swung the opposite way. I think the soft skills, the human skills, the eyeball to eyeball, the trust, the negotiation, the strategy, those are the things that are more defensible and more exciting. So I'm a product guy, I can get geek out about a feature set, but if I can't get my strategic mind around how I can do some kind of checkmate in the market with a partnership or alliance, then we're probably not moving forward on it.
Yeah. So I think the message I'm taking from that is that it's not just building a great product anymore. In fact, that's going to become table stakes over time. And I think, Mark, a lot of people equate the change, the sort of the death of software as a service. You get into the agentic world, people can build things quicker, more and more. In fact, this one chart I wanted to bring up was from our Agentic AI Futures Index, and the growth in the amount of developers that are able to build these kind of sophisticated applications is just growing at tremendous rates, and it's compounding over and over and over again. And you're right, there's going to be tons of people that can build really interesting and needed things very, very quickly over time. But I got your message here, which is that's not enough to be successful.
No, and even on the product side, look, I've had a privilege to work with some incredible technologists over my career. Um, I think we're going to see a little bit of swing back on the vibe coding thing, because the ability to produce something that looks kind of cool on a screen is now fast and easy.
Hmm.
But to build something that is ready and defensible and secure for a commercial go to market, there's still a massive gap. And so I don't know what we're going to call these people who are technologists, true blood technologists that know how to use AI, but those folks are becoming more and more valuable,
Yeah.
because you almost need the adult in the room with the kids playing with the toys. And I think a lot of us are kids playing with the toys right now with vibe coding stuff. I had an employee the other day say, "Hey, I just saved us money. We don't have to pay for our CRM anymore. I coded up a CRM system." And I'm like, why would you do that? Like,
Right.
we get a fantastic CRM system from 20 different places for $50 a month. Like, what do you know about CRM systems? And so you end up getting this like free like a puppy, problem.
Yeah.
Yeah, you can do something really quick, but now to keep it up and fix the problems that you didn't think of and to make it work, and like you get sucked into these things where you shouldn't be putting your time and energy. So anyway, I'm a big believer technology is going to advance product development and go to market, but we have to be a little bit sober when we kind of decide where the real value is.
Yeah. I mean, more and more of the labor market, particularly in knowledge work in the business world, more and more, a bigger and bigger percentage of that population is going to become coders, or the ability to build things, right? Where it used to be a very, very small fraction at a very high cost to bring them on board. Business leaders and people like you are going to be able to start the prototyping. And then obviously, yeah, you got to turn it over. So I get your point that the product cycles are going to continue to accelerate. But I want to dig a little bit deeper into that. Perhaps is not enough, right? And Nobody Studios has sort of a fascinating model. Rather than betting on, first of all, a single startup, you're effectively building a portfolio of companies simultaneously. And you're thinking well beyond the next cool product, build it and it will come. So walk us through the venture studio approach, what's working, and why you think it's uniquely suited for this emerging AI era. And maybe just start off just quickly, and I'll bring up a chart here, just a quick summary again of what you're actually doing, what the studio does.
Yeah. So yeah, the venture studio model is I guess, an asset class. If you're a financial person, you'd refer to it as an asset class. That's kind of a known thing. I didn't know the category when we created the studio and called it Nobody Studios. Found out later that venture studio was a thing. We named it studios because I think a studio is the place that creative people go to build things that are beautiful.
Mm-hmm.
And nobody, because we know that if we're lucky, we're going to attract amazing people to the journey, but we need people to check their ego at the door. Everybody's done cool stuff. It's here to do something special and roll up your sleeves and do stuff for real. Yeah, the model is really built around this idea that a lot of inefficiencies that I've seen in my career where, if you're a VC, you don't actually get to take technology across your companies or skill across your companies because they're all individual bets. They all have their own cap table, their own investors, their own interests. So even though as a VC, you might have an interest across multiple companies, you have no influence. Well, you might have influence, but you don't have power and you don't have control to cross-pollinate. And we really believe in this world of innovation, you're going to see cross-pollination as being one of the key differentiators. So just let's say I'm focusing on the dentistry business and I solve a problem for appointment setting using AI voice agents, right? That knowledge probably could be relatively quickly repurposed and put into 20 other industries, right?
Right.
And that could be 20 different companies, right? In our world, we can do that because we own the majority of all those companies we're creating. And so you get economies of scale and speed. And it also means even mistakes. We get to experiment with things that don't pan out. We put them on the shelf. They're not dead. In the VC world, something that doesn't work is a dead company. It goes bankrupt. The assets are sold off. You don't have it anymore. In our world, it's like an R&D lab. You want to experiment with things, half get it right, sometimes get it all the way right, sometimes not get it right at all, but they're all on the shelf. And we get a chance to take things off the shelf and Frankenstein them into a new business relatively quickly. And so by having a shared ownership model, we believe the speed of innovation that we're living through is about to go into hyperdrive even more than we're seeing today, that is a competitive advantage. And so you have to have an investment and ownership structure that enables that. But also you need to have incentivization structures across your team. Again, if you go to a CTO of one company in a VC capital firm and ask them to help the CTO of another company in the VC firm's portfolio, you might get cooperation just because they're your investor, but there's no incentive. It's a real distraction. It's a massive pain in the ass, and it's not sustainable, right? In our world, all of our employees own a part of everything we create. And so you get this Kritsu effect of talent and energy and mojo that's pretty electric. And I think it's a differentiator in terms of the market we're living in and the speed at which you need to build and create companies.
So is the takeaway that the future is less about finding unicorns and individual success stories and more about building these repeatable innovation factories where a lot of things can come out of it that you may not have envisioned when it started? Is that kind of the concept here?
For us, that's part of our secret sauce, is the ability to move fast and get economies of scale of the things that you do, repeatability, derivative companies. You get into something really interesting in one industry, you can do it in multiple. That allows us to build a scale that we project and the speed at which we project.
So I got a two-part question here. Is I want to, I created a chart on one of your success stories. I'm going to bring that up, and if you could just talk a little bit about that. But really what I want to sort of understand here is, and for the audience, is what kinds of companies or opportunities are you most excited about as you look ahead, into the future? But start just to bring this to life a little bit. Here's an example of who you've been investing in the studios.
Oh yeah, Evalify, I love it. So yeah, Evalify is a great example for a number of reasons. One, we didn't start out to create this kind of company. We had this concept that IP would be one of the ways we would inform what kind of companies we build or not, right? It makes sense if you could look at a landscape of where IP was dense, densely protected, and maybe where it wasn't. It would help you decide maybe where you should build or where you should build companies. And then we got fortunate that one of our founders, Nick Scoba, a fantastic former inventor at IBM, reached out to us and also had ideas around IP platforms and technology. And essentially, the brain power in a room and the whiteboarding led to this idea of one of the hardest things that is underserved. It's manual. It's not done very well, is doing this, what's called freedom to operate. So your ability to say, let's say I invent something new. How is that in the IP landscape? What does that look like? Who owns protection? Who owns patents? Who owns things that are similar to it that might cause a problem? Just kind of knowing, if you're going into an area with landmines or not. And the team had created this concept of, if you're familiar with Carfax, you want to do a background check on your used car. It's kind of like that. Before your Carfax came along, there was no really easy way to do a background on a car unless you're buying your Bentley, Scott. You wouldn't do it. So, they made it simple. Click button, $50, you get this nice graphical report. And that was kind of the leading idea of Evalify. Same thing. You can upload a product roadmap, a pitch deck, whatever documents you have on your product or idea or your company. We'll extract all the features, run it across the database of 200 million patents and 120 jurisdictions, and come back with this nice graphical report of where you have issues, where you don't have issues. We'll give you like a proprietary score, credit score, telling you thumbs up, thumbs down, somewhere in the middle, all in a few minutes for a couple $100, which would probably take you 3 to 4 weeks and 20 grand with a typical attorney, which surprisingly have actually become our biggest market. Attorneys and IP professionals are using it frequently. But yeah, you had on the slide, that was a good example too. Like that was a product that went from concept to product in the market in 6 months. I think at that 6 month mark, we were actually probably about 200 grand into that business. And we probably in hindsight could have done it for even half of that. But it's just a good example of relatively small investment, very quick to market. People are using the product in that 6 month time frame. We had revenue in that 6 month time frame. Yeah. And now with a few pivots on the technology and the go-to-market, it's really starting to scale. So we own a significant portion of that company. We'll be partnering with other folks to bring in more capital for it. We've already had overtures to sell the company as is today. We expect it to probably be one of our early exits when the time is right. But yeah, we're having fun building that one. And it's a good example of how you can build a real business with real momentum and real product relatively quickly. And our goal is to just do that at scale.
Yeah, it's an AI company, right? So
yeah, all of that search and all of the analysis is replacing what would be a very expensive, highly trained attorney or paralegal. AI is doing all that work.
All right. So before we wrap up here, get back to what makes you excited. I know, having talked to you several times, you're incredibly excited, but what are you excited about? Let's go out a couple of years. I won't say 5 years or 10 years because just the way things are moving so quickly, but just a couple of years out from now, like what is really exciting in terms of your North Star, where you'd like to see this all head, and what could actually be accomplished that even today will be hard to be accomplished as a technology and the model sort of evolve?
Yeah, I think things have moved so fast that I think that you're starting to get different classes of citizens too. This is what I was going to say. Like you have people who are really into it all day long, but they understand maybe the tools and the toys as they are now. LLMs, maybe vibe coding, etc. Mm-hmm. And they can kind of start to talk dangerously about agentic power, right?
Yeah.
But we step outside of that for 1 second, and you realize that 99% of the world isn't even close to that spot, right? You go talk to a plumber or a dentist. I'm talking about real business people with, $10 million companies, $50 million companies. They don't know the first thing about what we talk about all day, right? So there's this massive knowledge gap. We're still in the early adopters phase, So I think what's going to be really interesting is as the mass market comes to AI beyond just, I asked GPT a question. When they really come to AI in the next 2 to 3 years, that's going to be one massive, amazing moment. I think people don't understand agentic power is amazing because you're going to be able to start to do like, HAL 2000 kind of stuff. You're going to be able to do real exoskeleton around us as business people. But beyond that is AGI. So when we get to human level intelligence within the AI space, which I personally believe we're about 1.5 years away, maybe a year, people don't really understand what that's going to mean. It's game over. It's really everything's going to be recalculated. And so I try to balance my time between building things that are valuable for my employees, my investors, for the market in the current world, but making sure that what I know is coming around the corner doesn't make those things obsolete. And I just think AGI is a game changer that we're basically fingertips away from.
Yeah, I couldn't.
I'm equally part excited and scared about it. How's that?
Yeah. Well, I think you're right. I think, you were talking about the e-business and internet era. I remember back then in the early 2000 timeframe, the most strategic decision you can make as a business was what browser you selected. Yeah. And it's sort of like that with the LLMs today. They're going to evolve to become simply a preference. You can plug and play them, and it's not going to be where the innovation is. It's going to be the foundation or the gateway into the innovation. And there's so, I know from all the research I do and all the people I talk to, 80% of enterprises are still obsessing and focused on model selection, and that's not where this is all heading. So we'll see where it goes.
we definitely are going to live through some interesting times. That's for sure.
Yeah. All right, Mark. Well, this has been a real fascinating conversation. It really seems like an incredibly interesting dynamic that's certainly underway here. So thank you so much for joining us. Great stuff.
Yeah, Scott, love the work you're doing and love to continue the conversation. Appreciate you having me on.
Yeah, let's do that. Absolutely. And for our listeners, the takeaway should be clear. AI is not simply just changing how products are built, it's changing how companies are built. And you got to ask yourself, the traditional unicorn or bust model may no longer be the only way to success. In fact, I'm clearly not. So this notion of stop chasing unicorns as the only way to build long sustained wealth is not the only model anymore, thanks to AI. So again, thanks to Mark and the team, and for everyone listening, thank you for joining us. And we will be back again in a week or so with our next. Make sure you subscribe to keep up with all the episodes of the Next Frontiers of AI. I'm Scott Hebner. Take care. Thanks for listening, and bye for now.
Thanks, Scott.